Hello everyone, this is Leo Retamar, and today on Leo Listens, we are meeting with Roberto Riadigos with American Portfolio Mortgage. Hey Roberto, how are you doing today?
Awesome. Thanks for having me, Leo. Appreciate it.
My pleasure. Thanks for being here. There's a lot going on right now with homes and inventory and lending, so I'm really excited about learning a little bit about what you do and just get a feeling about you on a personal level and also on a professional level. So I'm really glad you're here today.
Awesome.
So Roberto, let's start. How did you get involved in the mortgage industry?
So I've been doing this for a long time. I actually, right out of undergrad, I worked for a finance company. Back in the 90s, there were finance companies, so late 90s. And I got a chance to get exposed to a lot of different types of loans, and mortgages was one of them. And as I spent more and more time with mortgages, I obviously saw that that was something that I enjoyed doing, was an opportunity to really help families and really see make a difference. And so got involved with that, and here, fast forward 2022, I've been doing it my entire career, my entire life, and it's been very rewarding in what I've been able to accomplish.
Nice. So I assume you've seen a lot of different scenarios, and from my experience, I mean, a loan officer or somebody that does mortgages, their experience comes into play big time, many times.
Oh, without question, without question. One of the things that I spend a lot of time on is working with buyers that unfortunately had a bad experience. A contract fell through, something happened, or they're 3 weeks into it and their lender can't close, and all of a sudden I have to come to the rescue and put together something that'll make it work. And sometimes, unfortunately, experience makes the difference for that other person that couldn't get it done. How to really look at it. Mortgages, it's almost like the jigsaw puzzle. It's just finding the right pieces and putting it together. Kind of looking at different opportunities that might be there with different loan programs. And at the end of the day, a lot of it is experience. For many years of my career, I managed. I had anywhere from a branch to an area to a region, and so throughout those times, there would be a lot of escalations that came into my lap and helping me solve other people's problems. And so that gave me an incredible exposure to be able to see how to become resourceful, how to find things. A lot of interaction with processing, underwriting, and getting a feel and understanding how they looked at things to be able to make sure that I was able to fix things the right way on the front end so that transaction was a lot smoother, and at the end, the experience that the buyer went through was something that ended in a closed loan, which is what we're all here for. And at the end of the day, every time that I work with somebody, we have that common goal. We have to put somebody into a house. We have to help that family own a home and create their new foundation. And so, we're blessed to be able to do that. And so, having the right people to work with, having the ability, the experience to have done that before, puts people at ease.
Yeah, makes a lot of sense. I mean, I've been doing real estate for 20 years, so a long time too. And one of the things that I tell my clients to make sure they have the right team, right? Whether it's a closing attorney, title attorney, your home inspector, your lender, your insurance company, and your realtor. It's so important to make sure that they each work together and there's good chemistry there, but also the experience. They all play a very valuable role in that home buying process. So with that said, I mean, tell me a little bit about a situation when it comes to a buyer. How flexible are loans nowadays? I know it's very difficult right now. Inventory is super low, so buyers are having a tough time getting under contract. Prices are going up. What should a buyer expect? What's the situation nowadays? Can you share some of that?
So, the first thing is exactly what you said is having your team together and having that. If you're looking to buy a house today, you need to, number one, get pre-qualified. Get with a lender who's going to look at your credit, your income, your assets, understand your whole picture, understand your goals, what you're trying to accomplish. And sometimes it's not even a matter of what you qualify for. It's just understanding the expectations that your income may allow a certain level, but your assets may limit you. Or you may have the ability to qualify, but there's certain things that just from I'm a father. I have 4 kids, so there's things that are a loan application that expenses that aren't there. You know, as far as your household expenses. So sometimes it's understanding what you can afford, not just from a perspective of what you'll qualify for a loan, but how are you going to live? Are you're going to run into a situation where you have emergencies? Are you going to have those resources available financially? So to your question, yes, it is hard out there because of inventory right now. That's the biggest challenge, where I work with a lot of buyers who are approved. We've done our due diligence. We've looked at credit, income, and assets. Now it's a matter to get out there and look for a property, and everything that they expected may not be there because of the price points that are available, or in cases where the taxes might be in a different location and taxes are higher. We have to adapt. So a lot of it is structuring, working with somebody who's going to be able to. It's not only you're approved for this $500,000 purchase. Well, that $500,000 purchase, depending on the property, the insurance, there might be flood zone, there may not be. The property taxes might be higher or lower. All of that can affect your approval. So it's having a lender that's going to have that flexibility and that communication to rerun those scenarios. It's not just a stamp of approval and go on your way. It's coming back and let's have this conversation. How will this property versus this property impact my cash to close? How will it impact my monthly payment? And in today's rates are changing. And so making sure that we're prepared that if rates do go up, am I approving you in a way where if all of a sudden rates change by a quarter, is that going to change? Well, I'm not going to put you in a situation where you put a deposit down on a property and can potentially run into a situation where you don't qualify and can put your deposit at risk. So there's a lot going on. In terms of is it easy to qualify for a loan? I will tell you that the requirements are pretty straightforward if you can prove your income, if you can prove your assets. When we're in South Florida, so I deal with a lot of clients that aren't able to prove their income and assets as easily as others, and so that's one thing where American Portfolio, not only do we do the traditional what's called a government loan, FHA or VA, for those veterans, or an agency loan through Fannie Mae or Freddie Mac. That's kind of your traditional loans that most lenders have. But in South Florida, the need to be able to have what's called a non-QM loan, a loan that maybe qualifies you based on the deposits in your bank statement, a letter from your CPA, or just the 1099. A 1099, somebody gets a gross amount, they take expenses, that net amount may disqualify them for a mortgage. We have programs where we'll use that full gross amount. People investing in rental properties where we use the potential rental of the property to qualify. So there's no way we can cover it in this interview, but just to give you an idea, there's a long menu of products that's available, and it's not one size fits all. Yep. It's really a matter of sitting down with a potential buyer, looking what their goals are, what their qualifications are, and structuring something that's going to make sense for them. And that might be different if it's a primary residence versus a second home versus an investment property. Those strategies will change, and that's what I'm there to do.
Yeah, well, that's a very thorough answer, and I appreciate that. As you were talking, I was thinking that's where the experience comes in, right? Because you can deal with somebody and they know FHA, VA, and the government loans we talked about, but having the resources, if somebody's looking to buy a second home or someone's an investor, and can they leverage income from the specific asset or property they're looking for, and how to actually structure that deal is so important. So, to your point, I was going to ask you, do you work with self-employed? In South Florida, there's a lot of people who have their own businesses, small businesses. What are some challenges you see, and can you help a self-employed borrower?
No, absolutely. South Florida has a lot of self-employed borrowers, and having the expertise to understand the tax returns. I joke with my team. I say, I could be a CPA after all these years of dealing with the taxes. At the end of the day, it's analyzing taxes, understanding what's there, and I don't give tax advice because I'm not a tax professional, but I can have that conversation with that tax preparer about what they're looking to do in the future, and seeing is Can they qualify immediately off of what they're doing? Is there a strategy of what they're going to do over the next year? Where are we at in the year that maybe the next year's filing is coming due? Right now, we're in February. People are filing their taxes now. So having a conversation with the tax preparer, understanding what's required for mortgages can help them structure things on their end that helps. It's a win-win for our mutual client.
Right.
But most importantly is the fact to have the flexibility of not everybody files their taxes the same way. And that's why there's alternative programs where someone may qualify using their bank statement deposits as opposed to their federal tax return.
Right.
Somebody may qualify using the rental income of the property as opposed to what they're earning. So a lot of it is having that conversation, getting an idea of what they're trying to do. Down payment plays a role. So some of these alternative programs may require a 20% down payment or a 30% down payment, where someone who has what's considered a full documentation loan, they can come in with as little as 3 or 5% down. So that's a big part of having that conversation and understanding what requirements can they meet and what flexibility do they have with down payment and so forth.
Yeah, I'm sure. So I wanted to ask you because right now you mentioned earlier inventory is low. Many buyers out there that we are dealing with are, quite frankly, sometimes a little frustrated. Some of them might be on the fence and they're not sure if it's a good time to buy. Should they wait? It's always a question that we always get asked. And can you tell me a little about interest rates? What's the situation? If a buyer should consider buying right now, when should they make that decision to buy versus wait? I mean, I always, I'm a big advocate of home ownership. I've seen what it does for many of my buyers. You need to live somewhere. So when you buy a home, obviously there's a lot of benefits attached to that. But can you talk a little bit about, interest rates? What should we expect, and what should, more importantly, buyers expect, and how they should plan on moving forward when it comes to home purchase?
Sure, no, absolutely. I get that question quite a bit. So it's a conversation that I've been having a lot over the last couple of weeks just because of where interest rates are. And just the easiest way I can look at it is, I look at the buyers that I helped, let's say a year ago or 2 years ago, and they were able to buy somewhere probably in the low 3s to mid 3s. So today, that same buyer would be somewhere in the low to mid 4s. Now, where will we be a year from now? Nobody knows. There's no crystal ball. But if rates keep going the way it's projected, it's very, very reasonable that we could be in low 5s to mid 5s. So now you look at that, and we could do the numbers on, let's say, an average $400,000 loan, how that payment could change from the 3s to the 4s to the 5s. But the part that I don't think people see is the opportunity cost, because by waiting, that property that you bought 2 years ago has appreciated. As a realtor, you know more than anybody. South Florida has experienced great appreciation these last 2 years. So that person who waited, not only did they miss the opportunity to buy, they missed whatever appreciation they could have had over the last year or two. But now they're buying, and the rates aren't as favorable as they were the last couple of years. So, I've always looked at it as you have to get into the market. No one's going to be able to time the market and say this is where it's at. I was working throughout the crash, and I experienced what happened from '07 through basically 2012 as we went through the whole array of the foreclosures, the REOs, the short sales, all of that. And the reality is that what happened then and what was happening in general with the real estate, a lot of it had to do with demand, because while there were opportunities where there was an exit strategy and people were buying and turning around and selling, there was no issue. It's when all of a sudden there was no demand and you had inventory starting to pile up. We don't have that. I saw a statistic. It's roughly that back then there were like 3.7 million homes, where today we have less than 1 million. So that alone tells you. I've heard things about birth rates where you look at where birth rates were 10, 15 years ago in terms of the people that were born in the 70s that would have been buying in the early 2000s. So there was less demand. There's more people that are of buying age now than there were then. So all of those factors contribute to the need, to the demand, the lack of inventory. What we experienced with COVID and people being able to work remotely, to relocate to places like Texas and Florida and leave New York and California, those are all things that are happening to us that are creating demand that weren't around 15 years ago.
Yeah, yeah. I mean, we get that question all the time, and sometimes in a joking manner, the answer I give when someone asks me, when's a good time to buy? And it's always 10, 20 years ago.
Yeah,
The
exactly.
next time is probably right now. So, you don't know what the future holds. But one of the cool things, and one of the things I like about actually leveraging a mortgage to buy your home, is that it actually forces you to save. I call it forced savings because when you pay that mortgage, you're paying down that equity.
Sure.
Right? So it not only hopefully is it appreciating, but you're also paying down that loan, which can really help you in the future. A lot of my first-time buyers, I tell them that the hardest property to buy is their first one. After that, hopefully they have some equity, and they're in a different position, and they eventually move up, buy a nicer home or a bigger home, or maybe use some of that equity to get into investing and all that good stuff. So, that's good information that you just gave us. Let's shift a little bit. Let me ask you, what's one of your most memorable experiences that you've had? Do you have any that you can share?
Sure, no, absolutely. It's funny you say that because I've been asked that question before, and it goes back to a single mother who the kids were not, actually one of the kids was on the loan. They were adult children, and they bought the home between the three of them. But what made it so special was that she had her challenges, and so obviously there was a lot of things that had to be, obstacles that had to be overcome to get us to that closing. But when it happened, one of the things was throughout the entire process, she couldn't believe it. She kept telling me that she wasn't going to buy a house. It was impossible. She's not meant to buy a house. And it was the cousin of a good friend of mine, and I kept assuring her. The reason it was so memorable is in today's day and age, people don't handwrite letters. She sent me a letter, and what really had me was just the fact that after all her years, she finally got into the house. More importantly, her children finally have their own bedroom. I mean, and they're adults, and so just to think, what that woman went through for her family and to get there. So that's always one that I think of without question.
That's great. I mean, I can't tell you how many first-time buyers I've worked with, and they many times don't think they can buy. They're not ready, or they don't know. And what I like to tell them is, look, if you want to at least buy in the future, have a conversation with a reputable lender. And the worst thing that's going to happen is they're going to tell you what you're going to need to put yourself in a position to buy. Best case scenario, he might surprise you and tell you, hey, you're ready to buy now.
Right.
So, there's nothing better when you kind of get on the personal side of this business, when you actually help somebody walk them through that process where they realize they're homeowners after they close. I mean, you make incredible friendships that way. So that's one of the really cool things about this business is when you get the opportunity to help somebody and you earn their trust, then they turn around and they buy a house. Now they're friends of yours. Now they're, you share ideas, you share memories, and it's a really, really cool part. So
yeah, I'll tell you something to that point. So many different generations I've helped within families, where I've helped the parents, the children, multiple siblings, and to be able to, I always think, I bet you I come up during the Christmas dinner or something because, here I am, help them all get into their home. So, it's a great feeling. And just that trust that you get when someone says, hey, you got to talk to him. He changed my life by getting me into my home. I mean, that's invaluable. I mean, there's so many rewards in what we do and just knowing the impact you have on families.
Yeah, I agree. We have a long conversation about those relationships we made, but that's an awesome story. I'm going to put you a little bit on the spot right now as we wrap up this interview. What do you like to do for fun?
So South Florida, I mean, you've actually been out with me. I got to work on my golf game, but whenever I get the chance to get out with golf, I have 4 boys, so they keep me busy. So whenever I can get out, golf, scuba dive are probably 2 of my biggest hobbies. And I've been a suffering Dolphins fan for many years. So whenever we're in football season, getting out to the games with the kids or my dad is always something.
That's right. You've been a season ticket holder for quite some time, right?
Yeah, it's been over 20 years. It's been
Loyalty. You have a great quality. You're very loyal.
Yeah, exactly, exactly.
Roberto, it's been awesome. Thank you so much for meeting with me. It's been a pleasure to chat with you about some things. Thank you again.
Thank you, Leo. No, I appreciate it.
If anyone out there is looking to speak to a lender, have any questions, feel free to reach out to Roberto Riadigos. You'll have all of his information below here on this video. My name is Leo Retamar. If you guys are looking for to buy, to sell, to rent, have any questions regarding real estate, feel free to reach out to me. I've been doing it for about 20 years as well. And if you are a local business or professional and you'd like to be featured on my show, feel free to reach out to me as well. I'd love to talk to you. And this whole show is about providing value to the community and bringing local businesses and professionals and presenting them to the audience. So feedback is welcome, suggestions are welcome, and I'd love to hear from any of you and all of you if I can. Thank you so much, and bye for now. Thank you.